Hey, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to do a quick recap video on the trades that I've taken as of yesterday, which is Friday the 20th. If you guys are new to this channel, go ahead and please subscribe to this channel, as we always leave out and give out free content. And if you're struggling with the trading and really need precision in your trading, go ahead right now and check our website at RoyalBluFX.com to start learning how to trade today with us. And let's begin.
Gentlemen, the king!
Alright, so as usual, we always start on the 15-minute time frame as our higher time frame. This is Friday, so here's what we were doing. We started on the 15-minute time frame. We naturally look at the market's direction and structure. So what we were doing right over here, as you can see, there was a high printed, then there was a new low printed over here. All right, and so my attention on Friday the 20th, if you guys want to go and check out the trades or at least spot the areas that we've traded, go ahead and refer to the Friday on the 20th. Right over here, okay? And if you guys have a seconds time frame, go ahead and check that out as well, because we place trades on the seconds time frame. So we saw this high and we saw this low, and we knew that prices are bearish at the time, because if you can see here, everything is bearish, right? This whole leg pushing is bearish. So but I'm not really trading all this data up here, right? I'm not really going to be buying or selling anything from up here. I'm just using this time frame right now as a means of direction and a means of structure. All right, and so what I saw here was we had this high. We saw that there was a break of structure, but when I zoomed out over here, okay, when I zoomed out over here, I saw that I had a fair value gap. I saw some inducement as well, and then I quickly adapted to what was actually happening right over here. All right, this is really important, because when price came here and took out our inducement, our idea is that we trade away from the inducements, or essentially liquidity. Okay, inducement is liquidity, right? It's just another form of liquidity, and an inducement always starts the liquidity process, right? So let's drop down to our 5-minute time frame right over here. We're going to go down to our 5-minute right over here. You can see that I mapped out my fair value gap over here and the inducement, okay, from this high over here. And essentially, and the reason why I do this is because I know that this is where prices will generally go to and react off of from excuse me. As you see over here, we had a chalk as well. We see that this is also inducement as well. All right, and then we had this out from right over here. I don't know why this was like that, but there's a break of structure, right? So let's go pan all the way inside here, because we are trading the seconds time frame. I trade the New York, so the New York Open. Let me just drag this over here. All right, and then let me just cut the market over there. Right here. Okay. So all I'm doing is I'm just paying attention to all this information right now. I'm not really focusing on anything up here yet, because prices haven't come up there yet. What I'm trying to do is zoom in on and zone in into the areas where price is more likely to react based off of structure. So even though I'm treating the 15-minute higher time frame as my higher time frame directional bias, I am, however, also adapting my mind around and wrapping my mind around to the directional bias on a lower time frame. So for example, this is my 5-minute right now, right? Now the directional bias is sells, right? Or selling. When I drop down the 1-minute, all right, I also think about the 1 minute as my directional bias as well. Which is counterintuitive, obviously, but you'll understand why I do this probably later in this video. But the reason why, so what I did over here was I mapped out again from this high to this low. I saw where all my inducements are, and the reason why I do this again is because why I redo all this process is because my main target, my main entry is the 5 seconds. So I always want to be adapting and or looking at my structure and my directional bias differently than the higher time frame. And what I mean by that is I'm only trying to target the highs and the lows of the 1 minute, not necessarily target the 15-minute the 50-minute highs or lows. Okay, so I'm not going to just be buying from the 5-second here and then like looking to target the 15-minute higher time frame, because that would take a while. So I'm putting my mind right here, my mind as far as knowing what higher time frame is for me. The higher time frame for me is the 1 minute right now, not the 15-minute time frame. And I hope that I'm making that a bit clear. So when I saw this here, I again saw that we're still below the break of structure. I know we took out the inducement, and we also filled in part of the fair value gap. And I know prices need to go away from these areas. So I'm going to drop down to the 5 seconds. And normally I trade the New York Open right when it opens, and I'll show you what happened over here. The New York Open starts at 9:30. Let me move my this over here for a second so I can show you guys. Where is it over here? Oh, they don't have the. Okay, oh, it's right here. Okay, right over here, just to show you guys. I'm on the New York. Okay, so I always have the New York set. The only reason why is because I'm always following the New York session. Okay, so I know this is 9:30 right over here. If you look all the way down here, it says 9:29, right? Right there is 9:28, and then while 9:30 was approaching, I was looking for the setup. Okay, so if you can see right over here, if I zoom out, notice over here I had my inducement set, right? And I know that inducement forms liquidity. Right over here, it kind of needs to populate right there. That's my inducement. That's the high. And so when the inducement was taken by the pip, let me just even zoom in so you guys can see this a bit clear. And I'll pan this a bit to the right over here, right there. Look at this. Price just took it by a pip and then just started pushing bearish. Now, I know the natural intention on the New York Open, when the New York Open opens, it just goes, it just flies, right? It just flies, and it normally takes out the highs and the lows of the previous, session. So this took out the high, and I was looking for my chalk boss in here, okay, right over here. And unfortunately for me, I didn't catch this. Now I could have caught it, however, with the breaker block example, which is this essentially, right? Like, but when you're on the 5 seconds time frame, it kind of, you need to be thinking on your feet quickly. And sometimes when you are on the 5 seconds, sometimes you don't, sometimes you aren't thinking too rationally, too quickly to bring you, to come to your conclusion, in terms of what, how to enter here. So anyway, this is what's considered a breaker block over here, right? Because price broke aggressively here with this candle, and then it just closed right up here, and it sold off. Essentially, this is for those break and retest traders that do this, okay? Which isn't wrong, obviously. So I noticed that when I got the chalk, I didn't have price come in, fill in this full imbalance, and it just left it blank, and price started going bearish. And you can see that I didn't chase the market. I just let it go as it was, but it would have been a nice trade nonetheless. Once price came here and tagged us on the inducement on this side here, it took out the main inducement line, which is this line right there, and also took out some internal inducement, which is right there. Okay, there's buyers here that are buying right when price is looking to tap near or at the demand zone. All right, and so they become my inducement automatically. So I know I could have entered over here immediately, although this would be just a bit aggressive for me. So I waited for price to show me more confirmation, which is the chalk right over here, as you can see. Right, there's the high broken, liquidity was taken over here, and then we got the perfect chalk, and then we had more inducement there. And once that has happened, once the whole formation has happened from the major structures shift structure change, okay, which is right here, the low was taken, and now the buyers are coming in, right? I was able to quickly adapt to the internal structure of this structural shift, okay? And price broke a high right there, as you can see. We had the inducement. Then I felt comfortable enough to look for to enter here quite aggressively, because I understood the intention behind the inducement and the fair value gap over here. So this is okay to do. Now, what's really important is a lot of people don't talk about this, and it's probably because I do this a lot, or we at Royal Blu FX do this a lot, and we teach this, is where whenever you're trading, okay, or whenever you have an entry, always refer to your left. Always refer to your buyers and sellers. Okay, you always need to look at both sides, because when you look at both sides, they both tell you the story. All right. So in this case, you can see that there's sellers coming in, right? That just came in, and now we're looking to buy. So for every reaction, there's a reaction, right? You've probably heard that saying before. So I saw this area here, this imbalance right over here, and what I noticed was it was empty, right? We had some inducement right over there, as you can see. I quickly adapted and put this as my first TP. So when I took a buy here, I took some partials as soon as price came and hit our first TP. And the reason for that is because I want to secure my profits here, right? There's no knowing if prices are ever going to continue bullish here and tapped at this higher time. Excuse me, at this at the extreme pullback over here at this high area where my fair value gap is over here. Okay, so it's safe enough for me to say I need to take some partials before continuing and hitting the rest of the trade. Okay, this is some of the stuff that we obviously teach in our course, obviously, wanting to make sure that you know that every time you buy or sell, and every time you're trading, you always need to be aware of what's happening with the other in the other market, right? Whether you're a seller or a buyer. If you're selling, obviously you want to be aware of what the buyers are doing, so that way you can be aware to either take partials or at least hold your entire trade until price actually hits your supply zone or demand zone, whatever. Obviously, you can see here there was a huge anticipation. I was kind of thinking to myself, okay, well, prices could reverse here based off of this area, so I really need to be aware of that, right? So that's why, hence, I marked out that chalk right over there. Okay, all right, I marked out that chalk. Of course, this can also become inducement as well, where price can just take it and go. I can see the structural shift come in here, give me another chalk boss, and then I can look for a nice buy to continue the direction to this supply zone. Okay, but that's obviously clearly not what happened. And once price broke here, I quickly thought to myself, okay, well, prices are going bearish again, and I need to quickly get out of the market before it even broke even. And that's okay, because I can already, like as I mentioned, once you understand the other side of the market, which is the sellers in this case, you can understand what to do here, right? I'm quickly trying to manage my trade without being kind of dumb and stupid and letting price just come and take me out here just because, right? Break even. I mean, I could just secure the rest of the profits, right over there. I don't have to wait for price to come and really take me out and just be hopeful and wishful that price is just going to reverse. Because once we're hoping and wishing, that's obviously a gambling experience, and I really didn't want to do that. So if you zoom out here, I'm going to show you something here. While price was going bullish here, I quickly adapted to the structural area here. There was a high, right? The low was broken here. This is a new high that first broke this high over here. So I quickly adapted to this, and knowing that we had to come and tag this fair value gap here, or supply zone, or whatever you want to call it, I quickly adapted to this and thought to myself, okay, well, I know price needs to go there, so we need to be looking for more structure, right? So I quickly saw this. We have a chalk here, obviously. All right, you can see it went from bearish, right, and now price switched to bullish. All right, and so I quickly found out where my inducement area was, right there. Okay, and then I waited for price to get down to this area. Okay, you can see that there was more inducement here. Actually, I didn't mark this one up, but sometimes when it's 5 seconds, you just want to kind of quickly, you want to just trade. Sometimes you don't have time to mark everything out, even though I have everything in hindsight. Okay, so once I saw these buyers coming in, right, because they were reacting off to this area here. All right, this low to high here. So I quickly thought to myself, well, that's just my inducement. Then price took them out, so that was a good sign. Then price took out the last area of inducement. All right, then we can see the whole formation of the liquidity, which is everything in here is internal liquidity. And then we knew that inducement was the last supply of liquidity. We waited for the chalk, obviously, because the chalk gives us that confirmation that price should continue in that intended direction. You can see that I didn't obviously just enter here aggressively, right? If I did that, I would have been in trouble. I might have been in trouble, it might not have been, based off of what is happening here, obviously. But yeah, once we waited for the chalk here, again, I repeated the same steps, same process, looking for liquidity. All right, you can see that I'm not just marking a huge demand zone like this and just, you know, buying aggressively like this, right? Silly willy-nilly, kind of like this, and just, you know, being in the range before price, you know, pushes bullish. I'm literally immediately in profit as soon as I find my confirmation. I have to wait for the chalk first, right? For the chalk over here. Then I wait for the confirmation on this side to the right here. And I still follow every candle to make sure that price is giving me what I want, that I'm reading price correct, right? Again, we saw another chalk here. I could have entered here, however. As you can see, my inducement was taken out right there, and I had my fair value gap filled in. This is the bigger, oh, excuse me, let me delete that there. Okay, fair value gap filled in. You can see right there, there was a chalk just above here. That's my swing high right there. Internal swing high. Okay, that's a terrible line. There we go. That right there is a wick above the highs. That gave me a confirmation that there is a chalk there. I can be buying here immediately. All right, and that's not what I did, obviously. I waited for a little more confirmation. There was my other chalk. More inducements, more fair value gaps. You can see this is another inducement where buyers have tried to bot but failed. And then I come in right after that. So this is where I came in as soon as price took out these guys over here, and then the rest is history. Right over here, we just took a buy, and we entrusted in our process that the market should intend to keep pushing higher here because of all this information, because of all this data over here that we had. Okay, and so this is how I traded the US 30 yesterday on Friday the 20th. All right, guys, so anytime you need precision, all right, every time you want confirmation, I always tell every trader that you need confirmation no matter the setup, okay? Even if the setup looks so good and you're like, oh, this setup looks good and I'm just going to trade aggressively, you always need confirmation. Confirmation is really one of the aspects of managing your trade, okay? And that's what I feel like a lot of people or a lot of traders out there miss out on. All right, confirmations can look, you know, in the form of, say, you know, indicators if you'd like, whatever. I don't trade indicators. I trade the market naked. Trading the market naked. I trade the naked charts. Let's just say that. And so this is how I trade. All right, guys, if you guys found this informative and you liked this video, go ahead and put a huge thumbs up, you know, because obviously we always give that free content, you guys. And until then, I will see you in the next video.